Good day, everyone. From sunny Winnipeg, from 201 Portage Avenue, I'm Rob Tatro from robtatro.com, portfolio manager from Canaccord Genuity Wealth Management here at the Tatro Wealth Advisory Group. I'm excited today because for the first time, we're going to be having an actual technical and quantitative expert to talk to us about specific stock patterns, what he's watching for, what his technical outlook is for 2020 in the stock market. I'm really thrilled. It's going to be neat. I've kind of reviewed some of the material that he's doing. Today, guys, we're going to be talking about patterns. We're going to be talking about, relative strength index. We're going to be talking about momentum in stock prices, signals, charts, trends. We're looking at stock charts today, and we're going to be taking a deep look at them. I will bring our guest in right now. Folks, live from, not New York, from Toronto. I'm excited and thrilled to be bringing in one of my partners, someone that I've been working with hand in hand for a while here. Javed Mirza, quantitative technical analyst. He's our research specialist from Canaccord Genuity Corp. Javed, welcome, and thank you for being here.
Thanks so much for having me on the show, Rob.
Yes, thrilled to have you. Okay, I'm going to share my screen here, Javed. I'm going to take you through some of the slides that you've prepped for us for this call today. This first one here is a secular bull market that is under pressure. So first of all, explain what a secular bull market means, and then you talk about RSI and the key 50 level.
Mm-hmm. So secular bull market, what that means is secular means a longer term trend. And from our perspective, and what we're talking about here is the longer term trend in equities. So those blue lines you see there, those are secular bull markets in equities, and they effectively last 20 to 25 years. Those red boxes are secular bear markets, which are effectively 10-year sideways trading ranges. So we actually have the longest view of anyone on the street, as far as I know. Our view is that the secular bull market has upside into 2030. So the other indicator you asked me about is RSI. It's a pretty common technical indicator. It just measures relative strength index, and all it's measuring is the relative performance of the price of the stock relative to the last 14 periods. So if it's trending higher, it's telling you that the stock is moving higher over that time frame, and if it's trending lower, it's telling you it's moving lower. And the key takeaway here is if a stock is above 50, it means it's trending higher on RSI, and if it's below 50, it's trending lower. And you can see in those red boxes in the second panel that RSI has moved below 50, and that's been a confirmation that we've moved into this secular bear market in equities. And the key takeaway here is that RSI on the S&P 500, which we use as the barometer, it's the broad barometer for quote unquote the market, remains above that 50 level. So in our view, that is still, we are still in a secular bull market. And we view, and our work suggests, that what's happened here has been similar to the 1987 stock market crash. So if you notice where that lies on the chart, you can see roughly that little dip there, or the little rise and then the dip in 1987. But if you zoom out, it's within the context of this 20-year uptrend from 1980 to 2000. And that's where we think we are now. We think if we're correct, we have another 10 years of this upside,
The chart that we're seeing here, guys, is a 100-year chart. So from 1920 all the way to 2020, three secular bear markets that Javed has identified: the 30s, the 70s, if you will, and the early 2000s. The key indicator that Javed mentioned there is a 50, the number 50 on the RSI. As long as your RSI remains above 50, you continue to have a strong technical positive. Now we are approaching or below 50 now.
You're approaching 50, but we've held in above it. So as long as we remain above it, we're constructive, and we view that we're in this and remain in this secular bull market.
Okay. Now, how long would something have to dip below 50 in your view for you to kind of raise the alarm bells, thinking we might be in a secular bear market based on this indicator alone?
Yeah, and so what I would say is, I'm a CFA charter holder, and for anyone who's done the CFA course, they talk about Mosaic Theory. And what Mosaic Theory is if you piece together a variety of different elements to help you come up with a story. And so what I would say is there's a variety of technical indicators. So it's not, and people who have been in the business long enough know that there is no golden bullet. What you're looking at is a variety of indicators, and if they're all telling you the same thing, then it's extremely probable that what they're telling you is correct. So sometimes you have instances where only one indicator will tell you something, but the rest are still flagging in the other direction. So what we would be looking for is a couple of indicators, and we'll talk about this as we get later through these slides. One of the other indicators we're looking for.
Yeah, and I think this is an incredibly important point, Javed, and I want to make sure our viewers understand this. So you and I have different jobs. Your job is to advise guys like me and advise institutional investors on what is happening in the charts, what is happening in the charts on a quantitative basis with respect to the patterns that you see, that you've been trained to see. My job is to build portfolios for individuals based on their risk tolerance, based on their situation, and to offer them wealth advice. So when I gather information and build these portfolios, obviously I'm going to take all the information I can from Javed. I'm going to take all the information I can from, our economists, maybe a Tony Dwyer, maybe a Martin Roberge, who's been on the show before, some of the macro guys. And for us, we take all of those pieces and we form an opinion based on your personal situation. And Javed, you just said, even for your technical opinion, you take a whole bunch of indicators and you kind of apply them to one kind of position on that. So incredibly important, folks, that there is no one size fits all indicator that you should live and die by. So let's take a look at the next, so Walter, it's relative strength index, to answer your question. The RSI's relative strength index, price momentum, the price momentum. Do you have a quick second to explain the top panel here, price momentum?
Yeah, so it's essentially the first derivative of price. So basically it's, when you did calculus and you calculated the first and second derivative. So it's telling you at the margin.
So first derivative, again, first, second derivative for you and I, that's a quite common topic, but the first derivative is effectively the change, right? The daily change, and it's calculated on a percentage, or not, it's not a percentage, but it's a derivative based on day to day. So go ahead, I didn't mean to interrupt.
No, and what I would say is it's the difference between different moving averages. And there's a variety of these momentum indicators, but they're all very similar. One of the most common ones that people talk about is MACD, which stands for Moving Average Convergence Divergence. That's MACD. And all it's telling you is in which direction price momentum is moving. Now, the reason all these indicators are important, because I'm sure you've heard studies, and there's that famous book, A Random Walk Down Wall Street, where they look to tell you that technical analysis doesn't work. But it turns out there's been a lot of studies since then that show that it actually does work. But the key reason we have these different indicators is because you can get 10 different people looking at this chart and they can give you 10 different observations. But once you start getting the math involved and you're looking at the mathematical output, then it takes that chart aspect and interpretation aspect away, and then you have that mathematical model. The reason that's extremely important, and it's funny because I just read an article on BNN where they were talking about this, is that more and more money is being moved by algorithms and machines. And what do algorithms and machines use? This.
Quant.
This is what they're doing. So it's hilarious when I talk to some people who are like this. And if you open your eyes and you look at this, it's like, at the very least, you don't have to use it, but at least you see what the machines are seeing. And the machines, and this is what I talk about later, it's the rise of the machines. They're our new masters.
Yeah, there's a movie called, I think it's a Terminator T3 or something.
Terminator, that's exactly it. That's I draw inspiration from that. And it's exactly it. They don't care about us. All the machines care about is what the math is telling them.
What percentage of the trading, by the way, you are a machine, Javed. Anyways, what percentage of trading on a day-to-day basis in Canada would you say, if you had to guess, I know you don't know the numbers, is attributable to the machines?
I'd say anywhere from 60 to 70%.
Yeah. It's not like it's obscure now. It's the odd machine that's doing the trading. Yeah. Like there are days, I don't know if you remember this day in, I want to say May or June 2010. Do you remember that day, Javed? Flash crash, where we saw back then the TSX was at, I don't know, 10, 11,000 or something, and it dropped 1,000 points in like 3 minutes or something.
Yep.
And it immediately came back 6 minutes later. Yeah. And, I wasn't at my desk, so I didn't see it. I didn't notice it. But like, there's no way humans are able to trade that quickly down and that quickly up, right? That cannot happen unless you have algorithms.